A hotel room looks simple: a bed, a bathroom, a key card, and one night of sleep. But behind that room is a real estate machine that resets every single day, pricing rooms, filling occupancy, managing labor, selling services, and turning location into cash flow. Traditional real estate runs on stability. An owner of an apartment building secures a tenant, signs a 12-month lease, and collects a predictable, static check month after month. Hotels trade in perishable time. Once midnight strikes, an empty room's revenue vanishes from the grid forever. You cannot sell last night's bed. To survive that relentless daily expiration date, a property cannot operate as a passive structure waiting for guests to arrive. It must operate as a hyper-efficient cash flow engine, driven by three invisible layers of architecture: algorithmic pricing, intense operations, and fragmented ownership. Room rates are never static. The price you pay for a Tuesday night stay in November is calculated by AI-powered revenue management systems acting as the property's digital brain. These algorithms ingest real-world data in real time. They monitor local weather patterns, upcoming convention schedules, and even spikes in competitor flight searches to predict exact demand. The system constantly balances two baseline metrics: occupancy rate, how many rooms are full, and average daily rate, or ADR, the average price paid for those rooms. Multiply those two numbers together, and you get RevPAR, revenue per available room. This master metric measures the true efficiency of the property, tracking the revenue generated by every single room, whether it is booked or empty. A hotel does not always want 100% occupancy. If a property sells out weeks in advance, the algorithm failed. It means the rooms were priced too cheaply, leaving significant money on the table when high-paying, last-minute travelers arrive. Beneath the digital pricing layer is a physical, labor-intensive operation tasked with manually resetting the real estate every single day. Maintaining the baseline room product for the next guest requires a relentless grind of housekeeping, front desk coordination, and constant maintenance, and round-the-clock security. Selling beds is rarely enough to sustain the operation. Properties layer heavy retail operations like bars, restaurants, spas, and conference rooms directly into the footprint to capture essential ancillary revenue. This chart shows GOPPAR, gross operating profit per available room. You can see how massive operational costs, labor, food, and maintenance, are subtracted from total gross revenue, revealing a much smaller, highly defended bottom-line margin. Unlike a passive office building, a hotel functions as an active, high-burn retail ecosystem, forced to operate directly on top of commercial real estate. The famous corporate brand illuminated on the outside of the building almost never owns the physical bricks and mortar underneath it. The actual building belongs to a real estate investor. This is the entity that buys the land, secures the financing, takes on the financial risk, and holds the physical asset. Global hotel chains follow an asset-light strategy. They act as software providers, loyalty networks, and standard setters, licensing their name and booking systems to the property in exchange for franchise fees. Then, a third-party operator acts as the crucial middleman. This white-label management company is hired to execute the daily operations, employ the staff, and run the building on behalf of the investor, taking a performance fee from the total revenue pool. This fragmented structure acts as a deliberate shield. It protects global brands from the massive financial risks of owning real estate, while allowing individual investors to plug their buildings directly into world-class pricing algorithms and international loyalty programs. Zoom out from the physical building, and you will see how these three disparate layers merge into a singular, cohesive machine. A hotel possesses the physical permanence and capital intensity of prime commercial real estate. It operates with the algorithmic speed and dynamic pricing mechanics of a Silicon Valley tech platform. And it requires the daily, high-burn operational intensity of a massive retail business simply to reset its inventory for the next day. Swiping a hotel keycard provides access to a highly optimized, constantly calculating financial engine designed to monetize time itself.